Hello, everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be leading the session. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Thank you. Looks like we're up and running fine. If anyone has any issues as we go along, please let me know. So, as always, keep in mind, there's risk with each and every trade that you take. So manage your risk in a way that makes sense, whether that's putting stop loss marks, hedge positions, or maybe using AvaProtect, which is a unique feature found on our web trader platform and AvaTrade Go mobile app. So I'm sorry, Sophia. Yeah, no, you can see my screen and hear me, right? You can't see me, but you can see my screen. Good. Sorry. So manage your risk in a way that makes sense for your risk tolerance and for your balance, obviously, in terms of trade sizes and that sort of thing. And also keep in mind that as we go over material, that it's coming from an educational perspective and not to be taken as financial advisement. And we'll take a look at that AvaProtect feature for a moment as we get going. So what is technical analysis? For those of you that are brand new to trading, maybe you need this type of basics. Those of you that are advanced traders that have been trading for a while, don't worry, we're going to get into the strategies and get on the charts. Technical analysis, what is it? It's looking at the historical movements on the charts for the prices for different instruments and trying to find patterns that maybe are repetitive, that help you to predict future movements in one way or another. And so this is what technical analysis is about, looking for price levels, support, resistance, trends, etc. That hopefully gives you an advantage in terms of knowing where you want to enter into trades and exit from trades. Now, indicators can be helpful. Many times indicators can tell you what you already see on the charts in terms of maybe an instrument reaching a spot where it looks good to sell or it looks good to buy. Indicators are a bit more limited than when you're doing manual methods of technical analysis, because indicators don't understand the fundamentals of what's occurring necessarily in the news. And it's always a good idea to know which way is the wind blowing. And if you're using indicators, understand that limitation that indicators have. And combined with your manual methods of technical analysis, you can typically work out pretty good strategies. Now, if you have any questions as we go along or you want to give some input, please do so. I'm happy to share what you have to say if it's pertinent to the conversation and also answer questions. Now, as we get going, it's important that you understand that there are some options in terms of the platform usage. AJ, you're not going to hear me if I answer you. Can't hear me. Okay, 1 second. Okay, just letting AJ know it's just him who can't hear. Okay, so the options you have with platforms, we've got web trading, which is basically you go to the mql5.com website and it's a virtual MT4 and MT5 platform. We've got AvaTrade Go, which is our custom-made mobile app, and it's got some nice features on it for risk management, which I'll show you the same features on the web trader here in a moment. We'll take a couple minutes to look at that. And so the platform options are there, and MT4, MT5. If you're trading on web trading, it trades on your MT4 or MT5 account. If you're trading with AvaTrade Go, same thing, it's trading on your MT4 or MT5 account. Or you can use the MT4 or MT5 mobile apps or the downloaded MT4 platforms for MT4 and MT5, which are found right here. Okay, you can download it to your PC. And web trading is a virtual MT4, MT5. If you want our web trader, that's this login, which is different than web trading. The web trader is our custom-made platform, similar to AvaTrade Go, and this is what you'll see when you log in from here. You'll be in the web trader. Unless you're an older client of AvaTrade that maybe opened your account before the web trader was around, you might need to ask to have it added to your account, and then you will see it when you log in. And so this trades on top of your MT4 and MT5 accounts. From this location, you can switch to which account you want to use. All of your accounts will be listed in this area here where it says accounts. And so risk management stuff, if I'm going to gold and whether I want to buy or sell, when I put the number of ounces I want, it tells me the lot size. It tells me the margin impact, how much margin is required to open the trade. It tells me the overall value of the position in my account currency. And also, if you do a stop loss, maybe I say, okay, if I'm selling on gold, maybe I think it won't go above 1900. That's not necessarily what I really believe right now. But if this was the case and I put my stop loss saying, okay, if it goes to 1900, I give up on my sell, it tells me how much I'm risking, right? 470 in my account currency, USD. And so I might say, well, that's way too much. Based on my balance, that's nearly a third of my balance or a quarter. So maybe I say I want to downsize my trade and go to 5 ounces. And then I see, okay, here's the adjusted amount. That's how much I'm risking. So it's acting as a trade calculator for you as you're trading. The same with your take profit. If you put a take profit price, if I thought it was going to plunge to 1750, I put that price as take profit. It tells me how much I'll make. Okay, so I can see risk, reward, potential risk, potential reward. The other option here, instead of a stop loss, is maybe I choose to do Ava Protect. And whatever time period you pick gives you a premium cost. And no matter how much you lose, if the trade goes the wrong way during the time period up to this expiry date and time, any losses are added back. And your only cost for that protection is the premium cost that's listed. The premium goes up with longer time periods and with larger position sizes. Okay, so that's an option as well for managing risk. Yes, Andrew, all of the webinars are recorded and available on our YouTube channel. So you've got, just go to YouTube. If you keyword search in their search AvaTrade channel, you'll find it. And there's a section for all kinds of stuff, section for English-based webinars, which is where you'd find this webinar, and other English webinars from our chief market analyst, Naeem Aslam, and educational section with how-tos on AvaTrade Go, on the web trader, etc. So there's a lot of useful information that is on the website, or I'm sorry, on our YouTube channel, including the webinars being uploaded by the next business day. So since we're here to talk about technical analysis, how can the web trader platform help you with that? Well, we can expand the chart to go full screen, and we can do our technical analysis here. And you see, all I do is roll back my mouse, and I can see my price levels better by rolling back. And if I want to draw a line, I can do that. We've got those tools to draw lines. And so if I want to do my support line, I can put it at any angle that I want. Okay. And so it's very simple to utilize the chart on this platform and find support levels. There's a nice support level. That was predictable, right? Look, it hit and went up, hit and went up, hit, went up, hit, went up, hit and went up. And look where it's holding now, just above that price level. So it's very simple to do your technical analysis. And this is a gold chart. So we're looking at 1 minute candles, right? This is if you're a scalper, if you're trading on 1 minute candles. But it was very predictable. You could have made a lot of profits in the past several hours trading up from this support level very easily. Now the move's tightening. Maybe it's going to break eventually, but very simple to do your own technical analysis with support and resistance on the web trader. Now you also can get signals, right? So if I go here on all live accounts, if I go to the Trading Central premium services, they're free on all live accounts. On demos, not all of this is active because it is a service that costs AvaTrade money, but On all live accounts, it's provided for free. And the signals you'll find in what's called analyst views, the technical analysis signals. So you see all kinds of currency pairings with timestamps, so you know exactly when they came in, and you're looking at a breakdown of the price levels drawn for you, the breakout move expected, etc. USD Canadian, you see the expectation is to drop. Why is that? Well, fundamentally, we can talk about why. You know, stimulus coming, that should weaken the USD, right? I'm talking about stimulus in the US. There's also oil has been doing very well, so that helps strengthen the Canadian dollar typically. So the fundamentals behind it make sense. Now you see what they're saying is if it breaks this support level here, you see there's support here in this picture. If it breaks that support level, they expect it to plunge, okay, to have a nice move down. So you could see you could set pending orders off of this as well. Below the support level, if it breaks the support, you get in on a sell. If you program a sell stop to enter right down here, you might not sell while it's above the support because maybe it'll bounce. But if it breaks it, that's a sign of a downtrend, and maybe that's the spot where you would program your sell stop pending order to sell. Okay, so you see the price 1.2685. So, you know, how do I put that in action? Well, I can go to here. I can pull up USD Canadian. There it is. Okay, and I said maybe sell whatever that price level was. I can do a pending order, execute when price hits. I put the price that that support level was, put just below that price. If it hits that price, it'll sell. That's it, pending order. And the pending orders are simplified on this platform because you don't have to know that it's called a sell stop. There are 4 types of pending orders: sell stop, sell limit, buy stop, buy limit. On the MT4 platform, you must know which one's which. You have to tell it which type of pending order. Here, you just tell it the price you want to buy or sell from, and it makes it the right type of pending order. Okay, so you can quickly go here, find your signals, look at the technical analysis. If you agree with it, if you think it makes sense, you find the price that you'd want to get in. If this red line is 12,685, then maybe I'm looking at, based on this signal, 12,680, something like that. If it hits that price, maybe that's the price I would want to enter. Okay, so very simple to use the technical analysis that's built into this platform really as signals to either set live moves if the movement already started to go, or pending orders. Okay, so very, very nice features on the platform. Now, if we want to take a quick look at the fundamentals that are occurring, we can see the day has been kind of mixed. We've got the futures, you know, US 500 are slightly red, US 30, the Dow Jones, slightly green. We've got the S&P 500 completely flat, 0.00% change, okay? Ever so slightly in the green. And NASDAQ as well, just slightly green. Volatility almost 1% down. So if anything, it's trending towards optimism right now with the volatility down slightly. The US dollar weakened a little bit. Makes sense if the US dollar might continue to try and weaken with stimulus potentially right around the corner. Now, to talk about that stimulus, it may have some arguments back and forth before it gets passed, right? So that fundamental news story about stimulus, it could swing things either way because you've got the Democrats and the Republicans in the US that could be bickering. And if it looks like there's a problem passing the stimulus, you could see the US dollar strengthen, and you could see the indices and stocks maybe pull back down. Okay, so that's a news story that could move things, is the stimulus negotiations as they're trying to finalize something in the US. What we're looking at here, Wall Street ticks higher on upbeat corporate earnings. It's earnings season. And so, Andres, I'm reading your question about USD Canadian. We'll take a look at the chart on USD Canadian in a moment, okay? So what do the earnings mean for the markets? Well, there's upbeat optimism about earnings season right now. And if you're unfamiliar with what that means, earnings season, the publicly traded companies have to report their numbers every quarter. So typically each quarter, the major companies are showing their earnings per share, their revenue, and this happens once a quarter. And so a lot of companies are reporting today, tomorrow, this week, next week. And so there's some optimism about that. And in particular, and it makes sense, right? In particular, Johnson & Johnson did better than expected, and 3M. And you say, why would it be expected that those two companies would do so well? Well, think about Johnson & Johnson is doing things that are related to the COVID pandemic, okay? They're a company that supplies things that are needed. So Johnson & Johnson has done well, and the same with 3M, okay? 3M makes disposable respirators, hand sanitizers, safety glasses. You understand why they did better than expected. Johnson & Johnson is involved with drug maker duties. And so you can see then why their numbers were better, even though the numbers were expected to be good, they came in even better than expected. And so that's created some optimism. And if we look at the earnings calendar, and I think I have it, let's see, did I pull up the earnings calendar? Nope, I'll pull it up now. So if we go to the main page here, we can click on earnings calendar. And if we take a quick look at the earnings that came in, we see the Johnson & Johnson numbers, earnings per share better than expected, and revenue better than the forecast as well. Okay, and the same for a number of companies, either better than expected or worse than expected. But 3M and Johnson & Johnson in particular did very well and are listed here. And you might say, well, what about tomorrow? Well, we can look at tomorrow. Just click here, and big ones. Look at the top two here, top three. Apple, Tesla, Facebook, all reporting earnings tomorrow. So there's huge potential for technical breakthroughs on the charts, one way or the other, whether those numbers do better than expected or worse than expected. And so you know that there's potential movement on those exact stocks as well. We can take a look at Apple and Tesla in a moment and see what kind of opportunities could you get in on now in anticipation of the earnings coming out. And if you look here, you say, when are the earnings? Tomorrow, and you see it has a little moon after market close. So all day tomorrow, it'll be anticipation of what will the numbers be, right? And they won't be reported until the market closes tomorrow. That's what this is telling you. After market closes, and this is for tomorrow's schedule. Same with Tesla, after market close. So you're going to have all kinds of movement tomorrow on Apple, Tesla, Facebook, who also reports after the market closes tomorrow in anticipation of what those numbers will be. So we'll take a look at some of those as well. We're looking at headlines about the stimulus plan potentially boosting the US output by 5% over the next 3 years. That sounds positive. Stocks rise on earnings boost, and that's not just US stocks, global stocks. So remember, it's a global marketplace anymore. So the old phrase is when America does well, the world does well in terms of the economy, and when America sneezes, the whole world catches a cold, right? And so a lot of times as US markets go, so follow other markets around the world, and that's what they're saying here. Global stocks rose on Tuesday, not just US stocks, in response to strong earnings out of the US, okay? Then we also see, this is interesting, US Treasury yields hovered near a 3-week low based on potential roadblocks to Biden's stimulus plan. Remember, I was just saying, maybe this whole stimulus optimism could backfire a bit in the short term and cause fear, if there's fear that the 1.9 trillion won't get passed. And so we could see some great technical moves based on fear that could kick in as well if the right headlines hit or the wrong headlines. Depends which way you're looking at it. And so why would treasury yields be near a 3-week low? Well, when there's potential fear of a market sell-off, the banks raise the price of the treasury of the bonds and lower the yields, right? If there's high demand for them, price goes up and they offer less as a yield, as a payment on them. And so these US treasuries, the yields are hovering at a 3-week low. That's maybe a warning sign that if the yields are low and the demand is up for US treasury bonds, then maybe there's a potential market sell-off coming. Okay, all it would take is more talk about this stimulus plan being delayed because of bickering in Washington, D.C. Okay, so while the headlines are positive about stimulus, and you keep seeing that day after day, that could change in one headline, right? And treasury yields being down and the price of them being up, of the bonds being up, is a warning sign potentially. All right, so type OK if you're with me. I haven't had many questions, so I just want to make sure. Type OK if you're still with me. Audio is OK still? All right, great. I've got enough responses. Thank you. All right, so what do I have on the chart here? Crude oil. So look at this. I mean, we looked at this last week, and it worked exactly the same again. The technical analysis on this is amazing. So we look at this little alleyway that oil's moving in. It goes up to a resistance, comes down near the support, back up, comes back to the resistance, back down, near the support, back up. Look at the alleyway. It gets near the top of this little uptrend, anywhere near this line, and it drops. Anywhere near this line, and it goes up. So far, that's what it's been doing. So we look at the technical analysis on this and we say, okay, there's optimism about stimulus, but there's also potential fear if a headline hits that stimulus package is in trouble or something in the US, you could see oil plunge down, right? Stimulus is good for oil typically, good for the economy, good for oil demand then. And lack of stimulus then would strengthen the USD because less dollars would be printed if the stimulus got into some kind of trouble. And so that would strengthen the USD and at the same time weaken oil. And so since oil's paired against the USD here, it could pull oil down easier. So I think with treasury yields dropping, it's worth the effort to prepare for a potential negative headline. So if I look and I say, okay, here's a low point right here. If oil drops down here, it broke this pattern of this uptrend, of this little snake that's weaving up and down, but up. Low points getting higher, high points getting higher, low points getting higher, high points getting higher, all the way across this uptrend. If that breaks, and it breaks out of this little trend and breaks below this support level, that's a downtrend. That's a break in the pattern that exists right now, that has existed for some time, as these are 30-minute candles. So this goes back to the 22nd here, this uptrend. This little weaving uphill has been going on since the 22nd. So for 4 solid days, right? So now we're saying, what if there's some bickering in Washington, which if there's one thing you can expect, it's bickering in Washington. Johan, no, the webinar didn't stop. You can check the screen on your side. We're still going. So what kind of pending order would sell? If you say, all right, I don't know that there's going to be bad news, but if this little support level here breaks and this uptrend where the low points keep getting higher, the low points and high points keep getting higher in this uptrend, if that pattern breaks and it breaks this support level, then probably negative news hit. In that case, what kind of pending order would sell from a price that's lower, like down around 52? What kind of pending order would sell from a lower price? And again, if we use the web trader platform, we don't have to know the name, but I'll show you here on the MT4, we switch to pending order. And you see the 4 types of pending orders. To sell from a lower point, that's a sell stop. All right, sell stop. Ollie, I'm not sure what you mean. It's only one person on. I'm not sure what you're asking, but maybe clarify. All right, so as I'm showing you here, then the sell stop, this price, 52.18, would be below this support level. So I could say in my strategy that if the price breaks, let's say below 52.15, or if it reaches 52.15, that then maybe I think that means there was bad news on the markets. And so then I put my pending order to activate if it breaks to this price here, to this green dotted line. And I can put a stop loss back up here above that line, and my take profit somewhere down here at the next support level, which is around 51.5. Okay, so I don't have to risk much. I could put my stop loss at 52.3 and my take profit at 51.5. Let me get back into this. Modify. Stop loss 52.3 and take profit 51.5, just as an example. Okay, so I would be waiting for this support level to break, for this uptrend pattern to break out of the pattern that it's been doing since the 22nd. And if that happens, it breaks out of the pattern and breaks the support level, maybe that indicates bad news for oil, and there's your entry point. Take profit just before the support level down here. Stop loss would be if it reversed back above that support level that it broke. Maybe it was a false breakthrough. If it goes back up, you get out, right? Maybe I cheat this up just a little further so I don't have my stop loss too close. And you still see my potential profits about 3 times my risk. Okay, that's a really nice setup in terms of the technical analysis on it, technical strategy, and it kind of aligns with the potential fundamental news that could happen coming out of Washington, D.C. Okay, any requests on the next instrument to look at? I had one request of USD Canadian, and if anyone has any other requests, let me know. We are going to look at Tesla and Apple here in a moment as well. So USD Canadian. It's hiding on me. There it is, right in front of my eyes. Okay, and just as we were saying before we looked at the chart, okay, Dow Jones 30, sure. I'll pull that up as well. Maybe we'll peek at the NASDAQ also. So who can reiterate what we talked about? Why is the USD dropping against the Canadian right now? We look at 30-minute candles and you see it's going straight down, 3 candles in a row. Why would the USD drop against the Canadian? Potential stimulus out of the US, right? That weakens the USD. And if anyone's wondering why, well, if you print 1.9 trillion more in USD, it makes any one US dollar worth less. Not worthless, but worth less. Okay, Sophia, I'm sorry if your audio is breaking out on you. I think must be something on your side. All right, so we can see the US dollar has been pulled down against the Canadian dollar, but oil has made a push down today, right? So this is an opportunistic spot to say, okay, oil dropped today. We saw that. Oil came down. And so typically what happens when oil drops is the Canadian weakens and the US dollar strengthens. Okay, so if we see oil already drop, but the Canadian pulled the USD down, maybe we expect the US dollar to bounce off this support level. Look how nice this support level is. It hit here and up, here and up, and it's right on top of that support level. So it's very easy to say, okay, I could take a market move here, buy on USD Canadian, and I can put my stop loss right down here below the support. I don't have to risk much. Now, if oil does continue to drop, like it's pulled back some today, we easily could see the US dollar rise up to the next resistance level up here. Okay, why do I say this is a resistance level? Look over here. This is an old support level. Support, up, support, up, support, up. And that matched the old resistance level here, right? It was resistance, resistance. Usually the way support and resistance works, when this resistance got broken here, it became support. Okay, old resistance becomes support, and conversely, old support, once it's broken here, would become potential resistance if it comes back up, just like it was over here. Okay, so if you're scalping, you say, okay, I'm buying, I'll get out just before this resistance level, right about there. Okay, and that's still about a 3-to-1 ratio, potential profit to risk. Okay, so that's a nice little technical setup below a nice support level and aligning with the fundamental situation that oil is pulled down some today. Okay, we saw that it was in the lower part of that uptrend slope. It had pulled down. If we want to look back at oil, I'll show you what I'm talking about. Here, oil pulled down. These are 30-minute candles. Look how long oil's been dropping. Down, 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 down. USD Canadian is also down during that time period, which is weird because usually if oil's dropping, the Canadian would weaken and the USD Canadian would go up. And so maybe we've got an opportunistic spot for the USD Canadian when we look here and say we expect maybe a bounce then with the Canadian giving ground a bit with oil being down. No guarantee, right? But it's not much risk here below that support level, comparatively speaking to the potential profit. All right. You only need to be right 1 out of 3 times on this sort of move to break even. If you're anywhere near 50% on this type of setup, because technically you're getting an opportunistic entry point, if you're anywhere near even 50%, you're making a nice profit each day. Yeah, sure. Charlie, we'll take a look at gold. First, let's look at Dow Jones. That was requested. If I can find my indices, where are they hiding? Here we are. They're all together. Dow Jones, you see it pulled back some too. See this here? Down, 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 down a bit in the past few hours. On the day, it's kind of even. We saw that. But in the past few hours, it pulled back. So it was up at the open and pulled back down. So if there's optimism right now about stimulus, there aren't any headlines yet that the talks are going bad, right? So if there's optimism about stimulus, there's a support level right here that it got close to and didn't break. So if you're optimistic, you can buy on it, right? You also can prepare a pending order that if it breaks this support level, sell. So I like the idea of a sell stop down here below this support level. If it breaks this support, you see over here, it's support. If it breaks this price level, then a sell position from here, a sell stop getting in down here with a take profit at the next support level down here makes a lot of sense. And so you'd wait for confirmation of a broken support before you sell. Your potential profit's about 3 times your risk if you put your stop loss back up here and your take profit down here. So that's preparing for the potential bad news story that could hit. In the meantime, you could buy right now, right? You could say, okay, market move, buy, because it's above the support and it's pushing up right now, right? So market move is buy with a stop loss below the support level. Sorry, if I can click the right spot, there it is. Stop loss down here, right? And take profit up here. Now, I don't like that exact entry point, okay, because it's already made its bounce off the support level. So if I was going to make a buy move on the Dow Jones, I might put a pending order right down here above the support and say, okay, if it pulls back down, then I buy from just above the support level. And then your stop loss is here, and that way you're risking less, if that makes sense. So this looks like it makes sense why it bounced here off this price level. I don't know that it will continue to go up, but a pending order just above the support looks to make sense here, and a pending order just below this support down here in case it breaks. Okay, and I think probably the NASDAQ looks similar. It does. NASDAQ is very similar. You can look at the Russell, similar, pullback, bouncing. We've got the DAX. Again, it's a global marketplace, right? Had upward movement and then a pullback. It's the same thing on almost all the indices. There's your support level. This was resistance here. It broke through and became support. So the question is, do you want to buy with the optimism that exists? You certainly can. And then prepare for a breakthrough in case negative news hits below the support with a sell stop. Okay? So you can buy on what you know, sell, prepare to sell on what could happen. Okay? All right, so let's take a look then at gold. And then we'll quickly look at Tesla and Apple. Okay, what do I see on gold? I see a very nice support level here, right around 1850. 1850 is an important price level. It has been for a while, not just today, but in the past. So if I go to 4-hour candles, I can see, let me get rid of some of these lines I drew. I'll delete all the old lines. Okay, now we take a look on 4-hour candles and we say, well, here's a support level, right? Support, support, support. It's trying to decide what to do. You can just see that if this support level breaks, you could have a plunge with gold. If this support level breaks, what happened the last time it was below this price level? Right here. Look how quickly it dropped from 1850 down to about 1800 right here. Okay, so there's the potential if this support level breaks. The last time this price level broke, look at this drop. We're talking $50 per ounce. So this was a false breakthrough on this one. You see the wick, false break, and back up. So if you had a sell stop here, ready to trigger if it breaks below 1850, if it triggers it, goes back up, hits your stop loss up here, okay, small loss. It could do that 3 or 4 times. If eventually it breaks it and does this, and your take profit is down here, just above 1800, you can make 10 times what you were risking on those 1 or 2 times that it may have lost. Okay, so it doesn't scare me, this false breakthrough here that went back up. What I see is 1 false breakthrough, 2 false breakthroughs, and holding. I also see a time where it broke. Look at the profit, the huge plunge. This was a big drop here too, this breakthrough. So it looks like an important price level. You could think about a sell stop somewhere below 1850, 1847, 1846, wherever you think you're avoiding false breakthroughs for the most part. Okay. Now, with that said, you also could buy off the support level. What happens if there's good news about stimulus talks? What happens to gold when there's fear of inflation? When there's fear that trillions of US dollars will be printed, what does that do to gold? Gold is a safe haven from inflation. It's an inflationary safe haven. So if it looks like there's going to be a deal between the Republicans and the Democrats in the US for $2 trillion in stimulus, you could easily see gold go rushing up with inflation fears. okay? Inflation occurs when you print too much money and give it away too easy, okay? So there's a potential for a climb. But what if the headline hits that they're not close to a deal? Then the opposite can occur. So the answer to what should you do here is maybe pending order, pending order. And what I mean by that is if there's a deal on stimulus, then not only should gold bounce up off this support, but it probably should break this resistance at 1872. If gold not only bounces up, but breaks this resistance level here, then a buy stop gets you in with huge momentum on an uptrend. Okay, so you can wait for the big news to cause the movement before you get in. Your pending order could be up around 1878, above the resistance. So it would have to go up, break the resistance for you to decide now I'll buy on gold. And you still have the potential for gold then to come all the way up here. What's that, 1955? This high point here. That's the high point resistance. And easily 2 trillion in stimulus could create enough fear of inflation that not only would gold go up and break this resistance, but it could go flying up to this level here. So pending order here, buy stop, and pending order down here, sell stop. One of them is going to be triggered. And if it gets triggered and then it comes back and hits your stop loss, this is your reset zone. If gold comes down, hits your sell stop, opens it, comes back up, hits your stop loss, reset your sell stop down here, and let gold do its thing until it makes a move either up or down again. And if you keep resetting those, eventually one of them will have a big payout. It'll break and go. Eventually, it's the way gold runs, right? Eventually, it makes a big move. So you just have to be patient and be willing to say, okay, I could get false signals like here once or twice, and you catch the big one, and then there it is. Okay, it's a setup where you're not worried about win percentage, you're thinking about payout. Okay, could be a very good strategy to take your shots on sell stop and buy stop above the resistance and below the support as entry points. Any questions on that, or type okay if you're with me. This type of setup works good when you expect big news that can cause big movements, which is exactly what we have right now, that type of potential. All right, so let's take a look then at Tesla and Apple real quick before we run out of time. Here's Apple. Okay, Apple's open right now. It's a US stock. It opens and closes with the US market like Tesla. Apple is uptrending. What does that tell you about the anticipation of tomorrow night's earnings report for Apple? Apple gapped up today. It went up. Okay. Go to 1 hour candles. Look at the gap. Okay, gapped up, pulled back down, and bounced back up. Okay, so Apple looks like it has momentum right now. So what do I do on Apple? I'm buying with the momentum. We already saw headlines fundamentally that there's optimism about earnings season. We already saw good numbers come out today in the US on some major companies. We see an upward gap on Apple. And after a pullback, it went back up again. Okay, back above the opening price or back above the gap. And so this looks like something that's being driven by anticipation of good numbers at the end of the trading day tomorrow. So this is something whose momentum could carry now until just before the market closes tomorrow. You don't know for sure what those numbers will be after the market closes when the earnings numbers come out. So this is a move that maybe you're looking to carry and close before the market closes today or tomorrow. Take advantage of the optimism while it's there, and then take the profit before the numbers actually come and have a chance to potentially disappoint, right? So obviously a bad headline right now about stimulus could reverse this. That's the chance you take, right? A bad headline could come to reverse this momentum, but right now the momentum's up. And so where do I put my stop loss? I put it below this gap. You see the gap is here at the open. I put it down here. That's it. If it breaks below the gap, then something bad happened. And if we look over here, that's an old support level. See, this is or old resistance level. See, this is resistance and down. And here it broke above that price. It broke here above this old resistance. So if it comes back down, this should be support at this location. So a stop loss here is pretty safe unless there's bad news, right? And if there's bad news and it breaks this support, then you get out. Makes sense. Now the question is, where do I put my take profit? 4-hour candles. There's no resistance. 1 hour or 1 day, 1 week, 1 month. Why do we not see resistance over here? Because this is an all-time high, right? The markets are at an all-time high. So I have no spot where I could say if it goes up to this price, I'll get out because there's a resistance level. There is no resistance. So when you're at all-time highs. So you have to think about timing then as to when you would get out rather than price. And timing is there are earnings numbers coming at the end of market day tomorrow. So maybe you are patient with this as long as it doesn't break this old resistance / support, as long as it doesn't break below that and hit your stop loss, you let it ride through the day today. If it hits a profit you like, take it, or let it run through the day tomorrow as well, with an eye on maybe getting out before the market closes, before those earnings numbers have a potential chance to disappoint, right? So that's the view on Apple. No guarantee this keeps climbing because, like I said, any negative headline could come out about the stimulus and mess this whole thing up, but that's with any move, right? That's why we put our stop loss at a spot that's reasonable, because we know things could reverse, but usually they don't, right? Usually there's not unexpected crazy news. Yeah, you could put a trailing stop. Good question. How do you put a trailing stop? If you see a profit that you're already in that you like, and you say, okay, I want to put a trailing stop so that it's X distance back, and no matter how far it goes into profit, the trailing stop follows it up, so it's preserving any profit below a certain distance back. That's a trailing stop. To enact it, you just right-click over the open trade, go to trailing stop, pick the number of points back you want it. Okay, in this case, points. If I put it 50 cents down per share, that's 50 points. So 142.82. If I put it 142.32, that's 50 points. Okay, that's pretty close. I probably would click on custom here and pick a custom distance, maybe 200 points or 250 points or 300 points back. Okay, $3 full in the price or $4 full in the price. You see, I've got my stop loss at 137.75 and it's at 141.75 or so, a little higher. So we're talking, or that's 142, I should say, 82. So we're looking at about $5 down, so 500 points to my stop loss, right? So I would need to do custom if I want my trailing stop to always be that distance. So as this goes up, my stop loss would move up with it. If I want a shorter trailing stop, then I can do that. No, the mobile app doesn't have the trailing stop option. Good question. And a note of caution with the trailing stop. Leave your standard stop loss in place also as a backup, because the trailing stop is only client side. If I set it, it's only on my computer here. It's not in AvaTrade's server. So if you get disconnected on your computer, if this computer I'm using loses internet connection or gets logged out, the trailing stop's gone. It's not there anymore. The server doesn't know it exists anymore. So the standard stop loss, if you leave that as a backup, so I might leave my stop loss here and add a trailing stop that's a shorter distance. So if I lose connection and the trailing stop disappears, I still at least have this stop loss down here. Okay. No, Andres, good question. Trailing stop, the concept is this. It will allow the movement to continue running if it's going in the right direction forever, to bigger and bigger profit. if it ever, from the high water mark that it reaches, pulls back the distance of the trailing stop, the trade closes. If it pulls back 90% to the trailing stop, it doesn't hit it, and then climbs and goes forward to a new high, trailing stop is the full distance back again. Okay, but continues to move with it, with the all-time high, so thereby preserving any profit underneath that distance. So as it goes further and further the right way, you have more and more profit preserved and only risk the distance of the trailing stop back down. That's the way it works. Okay, it cuts you out early sometimes, the trailing stop. Sometimes it'll pull back the distance of the trailing stop, hit it, and then go higher. And you say, boy, if I would just left my stop loss further away, I would still be in it. So it can work both ways. It's not always a great thing to have the trailing stop, but once you have a profit you like and you want to preserve the rest, it makes sense. You don't have to have a take profit. If you have the trailing stop going, it'll go forever in the right direction and only close if it pulls back the distance of the trailing stop. You don't have to have a take profit. If you want to have a take profit with a trailing stop, you can though. Good questions. Okay, let's take a look at Tesla then. Apple picked up today's momentum and went up, okay, with earnings coming at the end of the day tomorrow. What about Tesla? And so let's see. I thought I had Tesla pulled to the top of my platform. I guess I don't. You know, you can move these. You can pull your favorites to the top, right? I could pull Apple and put it up here if I wanted to, okay? Let me find Tesla. Tesla's interesting. Here we go. We see Tesla's uptrending as well. And in fact, just broke a resistance level today, okay? This was resistance here and a big pullback. And as we go on these 1 hour candles, we see it tested that, pulled back, and now it's just at that resistance level, slightly above. Okay, so Tesla's uptrending as well. And they have earnings numbers coming at the end of day tomorrow. So you could play this like Apple if you wanted to. So it's just another opportunity that you could trade on, knowing that there's expectation maybe of positive numbers coming. And what do you think it does having Biden in the White House, who's more into green energy, who just killed the Keystone oil pipeline out of Canada, who's going to maybe hurt the oil industry, but promote and put more money to green energy initiatives? What does that do for Tesla in the bigger picture? More regulations on restricting greenhouse gases. Tesla functions with, you know, battery technology, right? Not fossil fuels directly anyways. And so that bigger picture also could be positive for Tesla. Something to keep in mind fundamentally as Tesla's breaking into all-time highs as well. So wouldn't take much to make a move on here and get your stop loss below the support level. Yeah, typically the shares would go up with what I just described. I agree. So you could take a look and say, you know, maybe this entry isn't the right entry for you, but it's certainly a bullish movement here on Tesla. You could wait for a spot that makes sense for you and then get in with Tesla, with the fact that there's a lot of positive momentum. Okay. All right, everybody. I think this is a good place to stop. We've been going for nearly an hour. So take a look at the major indices. Take a look at Apple, Tesla, oil, and gold. I think could be really big movers, especially gold over the next day or two. I think those pending order breakout, pending order moves could pay out quite well with limited risk. So take a move, pick your spots, and you know, I think the potential's there for some nice payouts. All right, thanks everybody for joining. Till next time, good luck with your trading.